Hey everybody, what is going on? Shaquan here from SLFX Trading, and in today's video we're going to be breaking down 4 currency pairs that I'm watching for my watch list. So I want to go ahead and also answer a question that I got on my YouTube channel asking how many pairs should an individual look at or even how many pairs I look at. So one of the things that I've struggled with throughout my trading career is only focusing on a basket of pairs, such as 1 or 2 or 3, because I find that I get bored. And so I've tried it. I've tried to just focus on 2 or 3 at a time. And what I found is if I only focus on those as swing traders, as a swing trader, I may not always have a trade. And then I'm just sitting there twiddling my thumbs, or I'll force a trade and then I become too impatient. And so that's just going into psychology, right? Now, also as a swing trader, I find that I'm holding my trades for more than a day, sometimes a week, sometimes a month. And to just sit there and only wait for that to play out without doing anything else, it's not that it's bad. It's just that I could be missing out on other opportunities, because let's just say there's a trade that takes 1 or 2 weeks to pan out, but then it turns into a loser. If I don't have anything else running after that to make up for that, after all that time I've waited, then guess what? I am stuck in that loss until the next opportunity happens that could probably take another week, 2 weeks, 3 weeks, or a month, maybe 2 months to fulfill based on the conditions of the market. And so for me now, what I do and what I teach people is don't focus on the currency pairs name so much, but focus on the setup. Don't focus on how many pairs you're trading, but focus on how many quality setups that you have based on the currency pairs that you choose to trade. So that's what I like to tell people to do. Now, I know it's different if you may be a scalper or a day trader. I think those are people who can probably focus on less because they're in and out of the market so quickly. But I'm just not one of those people who want to be in and out of the market, because I know if the market makes these long moves down and these pullbacks and then another long move down based on the trend, I want to be a part of that trend. I don't want to have to come back to try to trade this every single day. Because what I'm also trying to do is minimize trading mistakes on one currency pair, because I find that sometimes if you get too attached to a currency pair, you could maximize your trading mistake, especially if you're new, you don't have a really good understanding of trend or price action by itself, or even market conditions, which is the way the trend moves, which affects your profitability. Is it a quick profit? Is it a slower profit? Or is it consolidating where you shouldn't even be trying to play the game at all? And so these are things that has to be learned over time, and it doesn't take much. It doesn't even take long to learn. But for me personally, telling you, to the person who asked the question, in the beginning of the game, if you're struggling, focus on your technique first, and then what currency pairs work well with your technique. And the way you do it, and I'll make a separate video for this, one of the ways you do it is how often does one currency pair or the basket of currency pairs that you're looking at offer you an opportunity, and are those opportunities more profitable? That's one of the things that you're looking at. And there's a lot more you're looking at it, but that can be a start. Okay. So don't limit yourself to a number. Just focus on your opportunities. Okay. I think when you limit yourself, you don't push yourself. You can't challenge yourself. So focus on that. Okay. Let's look at a few currency pairs. So every single week, me and my clients, we get together on Sundays, Tuesdays, Wednesdays, Thursdays. Now you may say that's excessive, but we do things different days. On Sundays, what we do is we get together to share our watch list. Because as I said, we all look at currency pairs, but we may not all look at the same thing. And I do believe that where there's more than one eye on the same currency pair as another person, it helps confirm what you're going to be doing in trading on that pair. So for example, I have a client who looks at New Zealand dollar, so do I and a few other students. And so his job is not to convince each other that we see the same thing. It's just for us to see if we even agree with our own individual assessments. And so because we only trade one technique, which is my strategy that I provide to my clients, there's one authority, and there's one technique, and there's one strategy, and there's the same rules over and over again per opportunity on every pair. And so we are able to create watch lists that fit the group, versus this person trading this strategy, that person trading that strategy, this person doing this. Now you're all over the place. A group is supposed to work in unison, right? And this is why when you have jobs, there's the same vision, the same mission, and we do the same thing in the group that I teach. the same vision, the same mission. There should be as least confusion as possible. And if there is confusion, it should be an easy debate, right? Because we're not always going to agree, but that's okay. All right. So with this part, he said Shaquan, price made a new lower low, because we're trend traders and we focus on that. So the low came here around 0.80292. So okay, cool. And so this is where we go about setting the control of what we want to do. We want to be the sellers, because if price is making lower lows and lower highs, we don't want to be the buyer. And so price came, we have two zones here based on two different time frames, which you kind of don't need, but you may want based on, once again, the way the trend is flowing, how broad or how narrow, right? And so this is a broad trade. This is because price took some time for it to make a new low, and it's pulled back quite fast. But it could take a little bit more time to come back down depending on momentum, okay? Because that's the way movement works. It's about momentum. And so this was a Friday closure. Now, because we trade higher time frames, monthly, weekly, daily, and he enters on the daily time frame, then he understood that, okay, it's Friday. I don't have a trade. Now I have to wait till next week, which is fine because we have patience. And so what we're looking to do is sell below the lower high right here around 0.835, okay? And so now this week, if we get any more type of bearish information, and bearish information isn't always by candlestick color, but by the definition of the candlestick. And I only teach 4 candlesticks, right? If you go back in my past YouTube videos, you'll know and you'll understand why I only teach 4 candlesticks, because those are the candlesticks that are moving the market. And so now what he wants to do is now, even I, because I'm looking for a trade on this pair, is if we get any signal based on price alone that price wants to continue down, we are going to become the sellers on New Zealand dollar CAD based on the daily time frame alone. So that's this pair. Let's go to the next pair, which is going to be Swiss yen. Now, I like Swiss yen. I'm going to tell you guys why. All the yens have been pushing up. I'm actually in pound yen right now. She's in profit right now. I gave analysis out last week on EURJPY and AUDCHF to my clients saying, hey, price could go up, but the risk reward is really tight to a 1-to-1. Pound JPY is a little bit better, and now this one is a little bit better because this one can provide you more than a 1-to-1 risk to reward trade. I'm not for having 1-to-2s, 1-to-3s, 1-to-4s unless I can get that, but I don't have a stipulation that tells me I only have to trade those. If we get more than a 1-to-1, I'll take it. It could be a 1.5, 1.7, 1.8 and higher. That is great. But it was so tight to a 1-to-1 that if it moved by 1 or 2 pips, then we're going to be under. So my thing is like, you know what? We already have these yens. They've been doing very well for us. I'm okay with just being in 1 yen pair for right now. And this was one that I was thinking would come down a little bit lower on Swiss yen, but it didn't. And so instead now I'm waiting for price to pull back a little bit deeper to my estimation zone here around 135.4s. And if she does, I'm going to take a buy back up as long as price can stay above 134.06, because now you guys can see that we are in an uptrend, a continued uptrend cycle where price just passed 137.79s. Okay. This tells us that price wants to continue higher, but we don't want to buy high. We want to buy a discounted price above 134s. And so we're going to have the patience to wait for that to happen here. So that's Swiss yen. Let's go to New Zealand dollar Swiss, where I'm looking for the opposite to happen. So Swiss yen, New Zealand dollar Swiss, they both have the Swiss in common. Now, it doesn't mean that these pairs heavily correlate negatively or oppositely, where if one goes up, one goes down, but it is kind of good to know those things, okay? Now, if you guys look here with me on New Zealand dollar Swiss, you guys will see that we are in a downtrend. How do we know that? Because we can literally see price making lows, highs that are going down. Now, recently she did have a false breakout. Okay, false breakout, or I hate the word false breakout. I would say one of my friends calls it a false pump fake. And the one thing that I'll say about those is they can be tricky. But my client's been making money while price has been declining. And this probably would have been just one stop out if they introduced themselves to this trade here, right? And now we have a new low, which is the seller saying we want to continue selling. And so for me and how I'm looking at it with them, if price can pull back to stay below 0.63s, 2 1s, then we're going to sell back going down, okay? And honestly, if y'all can see this, I have a really clean chart. I don't have lines everywhere, not a lot of support and resistance. Actually, don't trade support and resistance. It's just really a good flow. We like to see price flowing. The only zone we have is just for entries. It's not an and or. We're not saying that if price passes the zone we're buying. That's not what we're doing at all, because price can still go higher as long as it stays below 0.632s or whatever else on our charts. But as long as it can stay above or below a certain exchange rate, as we point out here on our price charts, that's what we would like to see happen. And we're just using price notes tools, just the most recent highs and lows, to just say, hey, this is what price is doing now. We're not so much focused on a year from now, or I'll say we weren't focused on a year ago, 2 years ago. What is it doing now? Because that dictates how we trade today, right? Or whenever we have an entry. And so that's what we're doing here. No patterns or anything. We're just really fluffing out the noise and the extra time it could take to analyze and all the confusion. It's not an and or, it's just what happens when price gets here. And that's what we focus on. Then we make the trading decision. Okay, so we're going to look for continued sales. And the last pair we're looking at is going to be Australian dollar Swiss. Now, recently price was in a nice uptrend, then price reversed right here. If I can show you guys, this was the last higher low. Then we made a lower low, and ever since then, price has been making lower lows and lower highs. Now, I have a feeling that price could get back down here to 0.66299. That's based on the higher time frame. So now if price can pull back to stay below 0.70459, the past high, we're going to want to take sales back to the downside. Okay, so I have my zones here, my estimation zones where I want to trade at. And then if that happens, if price gets there, give us bearish information, we will sell again. But as you guys notice, we're just planning out for the week. We're not trying to take trades every day. We're looking to hold these positions. And this is the last trade that happened on Australian dollar Swiss. She stayed below 0.70700s. And it took 1, 2, 3, 4, 5, 6. It would have took 6 days for it to hit its first take profit, which is not long. That's just 6 business days, right? Or 6 trading days. And, you know, this one here, based on the way that I teach and trade, to get back to the lows, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trading days. If you can hold a trade for that long and not have to worry about trying to trade in between all the time, and that's a question I always have to people, would you rather hold a trade for 11 days or try to figure out the one pair all the time? Because it could be trading mistakes and confusion if you don't remember the direction that price is going in. So that's something I always try to put in people's minds whenever they're creating watch lists and then deciding to trade. We're just looking for opportunities. It's just being those opportunities until they take profit. Some of them take 24 hours. Some of them take, like I said, more, maybe 2 or 3 days. Some take a week. Some can take however. But let me talk about a winner that I just took recently, which is on USDCAD. So let me go to my watch list here. All right, so USDCAD, this was a beautiful winner, and it didn't take long. Now, this analysis was done on a weekly time frame. So I want to let you guys know that whenever you're analyzing a weekly time frame and you're deciding on how you're going to trade, your take profits and your stop losses tend to be bigger, okay? And I have to give that disclaimer out just like that. So here's what I mean. I saw that on the weekly time frame, the last higher high was on 1.29631. Price came back down to make a higher low at 1.24025, and then price ended up pushing up 1.30771. So okay, we have a new higher high. So now what I want to see is price stay above 1.24s, and if that can happen, this is going to be a long-term buying position. And so what I did was I ended up entering the trade on this candlestick right here, this green candlestick. Remember, I'm looking for bullish information that pierced my zone. It has to touch the zone and then show me, okay, Shaquan, we're going to go up. And so I did go into drawdown for 1, 2, 3, 4, 5 days before it turned around to put me back into profit. And so I entered the trade June 1st, and I got out last Friday, June 17th, for 422 pips, only risking 256 pips. Now, some of you guys may say, Shaquan, that's a lot of pips. What I want to put into perspective is, what would it look like week by week? Or what would the profit look like over time? Let's just say that's $1 per pip. That's risking 256 to gain $422. If it was 2, that's risking over $500 to gain over $844. If that was 3 or 4 or 5 or $6 per pip, what it is, and this is something you have to learn. Like I said, just because price would pass a zone, and it's even if you're trading support and resistance or a trend line, doesn't mean that you have to trade the opposite direction. You have to get clear on who has the control and where they pushing price. It's okay to be in drawdown from time to time, as long as you understand sometimes price just has a little bit more to go before it recovers for you. And this is something that I teach students. Once you set that take profit, you set it for a reason, because you understood price could go against you a little bit. But if you're not out of the trade, you're still in. So what you want to focus on is, okay, once I'm in profit, or once price is going my way, how do I manage this position? Because you don't want to lose it, right? It's when you start going into, when do you move your trade to break even? When do you move your trade into profit, or such forth? So you're trying to get a really good handle on those things. I guess I've been swing trading for quite some time. I'm okay with being in drawdown. I feel like this: if I was wrong, the trade would stop me out. If I'm right, the trade would hit take profit. It's only one of those. But I don't want to psych myself out of a trade. Because I did have someone on YouTube say, well, I think price is going to drop and go down. He's trading patterns and all of this. That's great for you. But if that's not what my eyes see, that's just not what my eyes see, right? But I'm happy I hit profits on this one. Other trades haven't gone well. I'm not been in as many trades. Because, God, I just feel like last month was just like a crazy month for me to be trading with all of the false pump fakes or whatever the case may be. As my friend would say, that's what he calls false breakouts. But yeah, so that's how I'm looking at the markets this week. You guys, if you question swing trading, or if you think you can't do this, you can do this. You just need the right focus and the right person to teach you how to do this. And if you want your charts as clean and simple as this, I teach people one-on-one. That's my specialty, getting you to understand how to do this in 6 weeks. And then I move you over to my group now. I usually just now put people in the group, but I'm learning that it may not always be the best, because you're going to have a lot of questions. And it's best if I can personally walk you through it. You know, an intimate virtual teaching where I slow you down. I take things out that you may not need, and I put the things in you that you need. And in 3 weeks, you can be trading this concept on one time frame, the daily. And then we'll move and maneuver you to other time frames in the group. But if this is something that you want, and you need to be slowed down, and you want a clean chart, and you want me to help you build a watch list, you want me to even help you trade the watch list after you learn, even teach you how to back test it so you can know what pairs work for you, then book a free consultation call with me. The link will be in the description below. And I pray I see you there. So y'all have a great and safe trading week. Be blessed.